Welcome back to the funding table, guys. We're so excited to have you guys back. We are going to talk about what's been hitting a lot of the first-time homeowners or homeowners in general. And honestly, it's confusing a lot of people. And we're talking about escrow shortage. If you've seen your mortgage payment jump up by $400, $600, I know that's a lot of money per month. Chances are you're not the only one, but we're gonna talk about what happened. Today, we're gonna be reacting to real life situations and we're gonna break them down to let you know exactly what's going on. We're gonna talk about property taxes going up, insurance premiums going up, and why your monthly payment keeps increasing. And this is the big one, loans that aren't structured correctly from the beginning. Let's go ahead and take a look. All right, Sammy, go ahead and take a look at this TikTok that I saw.
My mortgage payment went up nearly $1,000 because my property taxes more than tripled from last year to this year. So let's talk about it.
Yikes. I see this all the time. And let me tell you, it didn't happen randomly. There's a reason that this happened.
Tell us about it.
So for starters, as long as you had a fixed rate mortgage, your mortgage payment is not what's increasing. In most cases, it's going to be your escrow account. And that has many reasons why that could happen. Reason number one, property insurance went up. Maybe the house is getting older, or maybe you filed a claim during the year and that caused your insurance premium to go up, and that can cause an increase in monthly payment. That's one. Second thing that it could be is your property taxes increase. That has a whole bunch of things baked into it. That could be one, the property's increasing in value and the assessed value is going up. It could be that your property was reassessed after you purchased it. Maybe, your most recent purchase of the property gave the county an idea of what the property should be taxed at. Or another thing, which I see a lot on new construction, is your escrow account and your property taxes were shorted from the very beginning. So this whole time, you actually haven't been paying the full taxes that you owe. You've been playing catch up. Once that kind of catches up to you and you realize, oh shoot, I'm on the hook for a huge tax bill, that's where you start to see the huge increases in your monthly payment because you've been behind on taxes for 1 to 2 years. And that's not necessarily your fault. It could be your lender's fault. They did not set you up for success. They started your loan or originated your transaction with very little taxes so that you'd buy the house, not preparing you for what the true taxes of that property are. And so that comes to bite a homeowner in the behind 1, 2 years later, and they weren't prepared for it. They didn't plan for it. And some people even foreclose or lose their homes because of it.
Or we see brand new listings that we're like, wow, this is a brand new house. They've only owned it for 2 years. Sometimes people are forced to put their house for sale because they now have a lot of taxes to pay.
This is a common tactic in the real estate industry to try and sell you more house than what you could actually afford. And it sucks when a year or two later we see that house back on the market and come to find out, the taxes rose on them and they truly couldn't afford the payment for that house. Or maybe they could have, but the 2 years back taxes on it really bit them in the butt and now they can't afford it. So it matters who you work with. Your monthly payment could be going up for a few reasons: insurance, property taxes, things of that nature. But as long as you had a fixed mortgage rate, it's not technically your mortgage payment that's going up. The principal and interest will stay the same, but it's those other items, the insurance and the taxes, and that could be a bummer. But if you set things off in a proper manner from the very beginning, you don't run into these problems. And that's up to the professionals of who you're working with. So like we always say, Rosie, it matters who you work with.
It really does matter.
It really does.
With. And here's something that you need to understand when you're buying a home. If your loan officer doesn't understand how to calculate property taxes and gives you an incorrect estimated payment of what the property taxes are going to be, expect for your property taxes to increase in the future. If you're working with a loan officer that doesn't understand property taxes, it could look like your first initial mortgage payment is going to be a lot lower than what it actually is. And sometimes, if not a lot of times, I see that loan officers are using and enticing these lower monthly payments to, one, get you hooked to buy the house, and then two, to get you qualified for more than what you could initially qualify for. And although that could be great because you want to qualify for something a little bit more, a lot of people end up being house poor because the property taxes increase and now you're having to catch up, and that beautiful monthly payment that you once saw, that once hooked you, is no longer there. So it's definitely something that you want to consider when you're out buying a house. You want to make sure that your loan officer understands property taxes and is including an accurate property tax payment into your mortgage payment.
We like to set our clients up for success, and we would rather you get, a refund of property taxes at the end of the year. We would rather you have the same monthly payment year after year and not rising monthly payments. So it matters who you work with. I'll say it again.
Yes. Listen, I am not trying to get those calls in a year from now saying, hey, the monthly payment that you sold me was a lie and this and that. Honey, I never get those calls. So it's important who you work with, who is actually structuring your loan, because this will make a significant difference in the future. Trust me, you don't want to have your monthly payment go up by $400 to $600. That is a lot of money, guys.
That house that you bragged to your family about purchasing, you might have to sell it in 1 to 2 years. And man, I always say, to the lenders or loan officers out there doing those things, whether knowingly or unknowingly, it might not be now, but sometime later down the line, they're going to know that you did them dirty. So if you're wondering whether or not your property taxes went up, there's a simple way to try and calculate or find that information. So go on to either your appraisal district or your county website, wherever the property taxes are assessed, and view the trend of your property over the past 2-3 years. And you could see, what is my property being taxed at this year? And if you see that value of your property going up and up year over year, which is a normal thing, it shouldn't be drastically, but it should go up bit by bit year over year as home prices go up. If you're seeing that, that means that it's more than likely your property taxes are also going up a bit by bit. So that could be the reason for a small influx. If you see in 2024 your property was being taxed at $50,000, and then 2025 your property is being taxed at $300,000, that could probably be due to the property being new construction. And that's one of those things where if you see the major jump in monthly payment, your escrow account was being set up on this $50,000 taxable value as opposed to the $300,000 taxable value, which is what your property is worth. So that's where the game is played. But if you haven't filed the homestead exemption yet, if you bought the property and you live in it, then you file your homestead exemption. That decreases the amount that the property taxes can go up and gives you a property tax break. So you could be missing out on some savings there too. You could be overpaying on the property taxes.
Yeah, that's a huge home buyer hack. If you're not filing your homestead exemption, I don't know what you're doing, guys. But it definitely protects you and it helps you pay the least amount of property taxes. So it's a no-brainer. If you want to know more about that, check our previous episode. We dived deep into that topic. So make sure you view that episode.
And if you want help with filing your homestead exemption, we're going to have a potential in-person class and some virtual classes as well too.
Yes.
So you can sign up for those and get the free help to file that homestead exemption.
Yes, absolutely. And if you're thinking about buying a house, here's a few takeaways from this episode. Don't just focus on the monthly payment that they show you. You want to make sure that you're asking these questions. Are the property taxes based on the full assessed value, not just the land? Are these insurance numbers realistic in today's market? And what happens if the taxes get reassessed next year? Get an estimate of how much you could potentially pay, how much you should kind of look out for. I mean, it's always better to just be over-prepared than under-prepared. Because the truth is, your monthly payment isn't always what you see on day one.
And that's the sad truth.
And being informed up front will save you a lot of stress now and in the future.
And remember, it's going to be you making the mortgage payment, nobody else. So you want to make sure it's as accurate as possible.
If your mortgage payment went up and you had no idea, well, now you do. I hope that you guys learned a lot from this episode. Be sure to like and share to your family and friends. I'm sure that there's someone out there that's wondering why their mortgage payment went up. Be sure to share this. Follow us on all of our social medias. And if you're needing help in this situation, be sure to send us a message. We're always willing to help. We'll see you guys on the next one.
Peace.
Bye.